Hello everyone, and thanks for tuning into the Financial Investor channel. My name is Brent, and today we're going to be taking a look at a company labeled LVS Las Vegas Sands. This was a company I owned back maybe 4 or 5 years ago. I also owned Wynn Resorts back in the past as well. And recently a viewer subscriber dropped a comment saying that they recently added LVS to their portfolio along with Macy's, ticker symbol M, and the positions were up. Me being currently looking for other investments, I wanted to take a look back at Wynn Resorts and Las Vegas Sands along with some of their other competitors and take a look at their financials, their overall metrics to see where they are at currently and if they are worth investing here in the M1 Finance portfolio. So that is what we're going to be covering today. If you are brand new to the channel, hit that subscribe button below, cover the stock market, dividends, real estate. If you do enjoy this video, find it helpful, hit the thumbs up. And if you have any comments yourself, drop them into the comment section below. I will try to make this video as quick as possible while covering as much of the information that I would normally look at here in a very quick recap of, when I'm doing a 500-foot jump deep down into these specific stocks. So I have 5 stocks in addition to Las Vegas Sands. That's the primary one I want to take a look at. So I have Marriott Hotel, ticker symbol MAR, Hilton Worldwide, ticker symbol HLT, the Mgm Resort International, ticker symbol MGM, and Wynn Resorts, ticker symbol WYNN. Now, when I'm looking for stocks that have competitors within a specific industry, I go to CNN and I go look at the market. So here, I went to CNN Business, took a look at Las Vegas Sands. Now, because I'm interested in take a look at other companies within their industry, their competitors, and then do comparisons against them, I will go to this website, scroll down slightly, you're going to see some information related to their their specific company. And as you move down here, you're going to see some of their competitors. Now, these are what I'm going to be comparing Las Vegas Sands to. Again, Marriott, Hilton, MGM, and Wynn Resort. So I grabbed them, put them all in here inside of different tabs, and I was kind of reviewing them. But what I want to show you here is taking a look at their revenue, free cash flow, and net income over the past 10 years, and just give you a quick summary as to why I'm considering investing in Las Vegas Sands. And also Marriott made another really good appearance as far as where its financials are sitting at, but I felt this may be a good video to kind of cover with you guys as to why I may be diving here into Las Vegas Sands as a upcoming company within the portfolio. Now, starting over at Wynn Resorts, we're going to go ahead and go from last year back to Las Vegas Sands. We're going to be taking a look at revenue, net income, free cash flow, and we're going to look at it in percentages. So anything you see here on the board, divide it by 10, and that's going to give you your average per year for their revenue, net income, or free cash flow. Now, up on the board, we have Wynn Resorts. We have their revenue up 13.3% on average over the past 10 years, or 133%. We also have in the orange their net income up 4.17,000%, and their free cash flow in the negative, down 266%. So we do have a red indicator here, just negative free cash flow. And if you want to look into this a little bit more, you could go and take a look at 10Ks, go to their website and take a look at why it has happened. Why do they have negative free cash flow? It looks like it was recent here in 2019. So maybe they did a recent acquisition or they needed a lot of cash for something out there. Next, we take a look at Mgm Resort. I'm going to go through here these fairly quickly because I want to cover as much information as I can in a short amount of time. Mgm Resorts here, we can see here revenue up 98% or 9.8% on average per year. Now, everything else here is negative. We have negative 90% in their net income. From 2013, this company really has just been in the negative, and slightly over the past 5 years. They have been on an uptrend over the 5 years, but really over the 10-year period, their net income hasn't gone anywhere. Their free cash flow is also negative 23% over the past 10 years, or on average, they lose about 2.3% of their free cash flow per year, and their net income, about 9% of their net income goes down per year on average, just over the last 10 years. It doesn't mean that it actually happens because we can see as of 2016, they have been in an increase there. and revenue up 98%. Jumping over to Hilton, Hilton's actually at some all-time highs currently, but we can see by their financials that really a lot of investors should probably be looking at this one as sort of a warning. Over the past 10 years, Hilton has gone negative 4.18% with their revenue. So they lose an average of 0.4% of their revenue every single year over the past 10 years, giving them a negative 4% over the past 10. Also, in the red, we have their free cash flow down 32%, and their net income is the only positive thing here, but we can see that this thing swings year over year. It's very cynical, and it's currently sitting at 69% for their net income, or roughly 6.9% over the past 10 years on average per year. Next, Marriott. This was another good choice that I was taking a look at. If we look at this one, take a look at its financials. Its revenue up 7.5% on average per year, 75% over the past 10. We have in the red free cash flow up 336, and their net income up 1.82,000% over the past 10 years. That's really good there. That is a healthy looking, as far as financials, I like to see red, positive across the board. And then we have Las Vegas Sands, another good one here. This one, across the board, everything is positive here. Revenue up 10.1% on average per year. In the orange, free cash flow, net income up 15.6% on average per year. And we can see that their free cash flow is up 2.14 thousand over the past 10 years. So again, Marriott and Las Vegas Sands are both trading at, very good financials, everything positive over the past 10 years. Now, I don't really care to dig too much deeper into the Hilton, MGM, or Wynn, because when I took a look at these, the Hilton, this one does not have a growing dividend over the past, X amount of years. This one's basically cut their dividend. They've also had a huge gap here between 2008, 2016. They don't have a lot of consistency here, and they haven't had any increases, as well as over the past just year, they're up 33%. I believe that this company is financially having some issues. They may have some returns that they're returning to their investors because of the stocks going up. But overall, their financial metrics and a few others did not sit well with me, so I'm not going to be covering the Hilton. The other one, MGM Internationals, this one has 1 year of dividend growth over the past 10 years. We can see here on the information here, they really haven't paid any sort of dividends until recently, starting here in 2017. And they've only done one dividend increase here, which has gone slightly. Now, as far as MGM goes, we already saw its tenure over the past 10 years. It's been on the decline as far as two metrics. I believe it was net income and free cash flow. So not one I am currently looking to consider. So I'm going to go ahead and knock that one out as well. And then we have the Wynn Resorts. Again, the Wynn Resorts, we had negative free cash flow, not a negative in my book as far as it's a resort. So having negative free cash flow some years, you can see I had negative free cash flow going into 2015, but it quickly recovered it. And we're showing currently negative free cash flow. But again, they are a dividend increase here for 1 year since 2018. If we take a look at the way that they raise their dividend, it's very sporadic. They have a quarterly paying dividend, but they just don't raise it that often. We can see here between 2015 and recently 2018, they really haven't gone anywhere with their dividend. It would be just a lot of growth. And when I took a look at Wynn Resorts and compared it to its starting yield and 50-day, 200-day moving average, and I have percentages in there, I'm going to go ahead and remove that. We can see here that it is trading at below 200-day moving average. Oh, it's actually above 200-day moving average, below 50-day moving average. You're getting a starting yield of 2.62, which is fairly good over the past year. But again, with its financials, I don't believe, this one has a reason to be downtrending currently, and I don't know where. It's a little bit riskier for me to be invested in a company like that, and it doesn't have a whole lot of dividend history that I would really like to invest and kind of add to my portfolio for any sort of reason. Now, the only two that I'm leaving here to kind of compare and do a better deep dive in is Las Vegas Sands and the Marriott. Now, both of these, If we take a look here at Las Vegas Sands, it has 6 years of growing and paying out a dividend since 2013. If we scroll down here, we'll see that recently they started paying out dividends back in 2012. Their 2013 was the first time that they increased their dividend, and they've been doing steady increases for the past 6 years since then. I believe this is probably their 7th year now. They have a starting yield of 5.2%. And we have the Marriott, which has 8 years of dividend growth since 2011. If we scroll down here towards 2011, we can see here that they did do a bit of a stock cut. Back in 2011, they had a bit of a gap, but they did a stock split, which probably, that may have hurt them a little bit. They split their stock. They continued to raise their dividend, and they just had some tough times after that recession. They did cut it for a few years and then brought it back at about half of what they had initially done. So this one, it has had some history of cutting its dividend by 50% or just cutting it completely. But we're still going to go ahead and leave it in here for the time being. We can see its payout ratio is fairly low at a 32.7, while the other one does have an 87.5% payout ratio. Now, taking a look here at these companies in the 1 year term, we can see Las Vegas Sands currently trading fairly low for the year at $59.23. Now, taking a look here, I'm just going to go ahead and bring it its 10-year. This one has had a couple times where it's hit its resistance at about $80 is resistance point. It hit it back in 2014, and it hit it recently here going into 2018, I believe. If we take a look at the 3-year, this is going to show us a little bit better here. So midpoint 2018, it hit its resistance point of $80 before coming back down, and this could be due to trade war, but it is now down here near its support level in the 40s, $47, I believe, was its support. It's at $59.23 with a starting yield of 5.13. It already has very strong financials following right behind it. Marriott, now this one, we're currently looking at the 3-year. This one is trading at all-time highs. If we take a look at its 10-year, it has gone just huge over the past 10 years. It hit its all-time highs just recently and has kind of backed down. So going into 2018, it broke out. Just January 28th, 29th is where, the stock market had originally hit all-time highs. And 2018 was a very rough month. We had trade war going on. That played a part here with the Marriott. And then December 26th, President Trump came out there, big ol' foot, kicked the market higher. And this one has been trending up recently, sitting basically near all-time highs. I'm not sure how much more sort of an incline this one can get, but if you were to buy into this one, you're basically buying it at all-time highs. You're also buying it with a starting yield of 1.25, whereas generally if you were to bought this one at some of the lower points, you may have been able to get in around a 1.5 or nearly a 1.6. So really not too big of a difference there. Just I don't like buying in at all-time highs when there's other value out there. Now I'm going to go ahead and compare these two specific companies. I'm going to go ahead and compare their price to book. We'll take a look at one individually. So price to sales, price to book. So we have Marriott with a price to book of 28.47, and we have Las Vegas Sands with a price to book of 8.2. So of the two that are both in the resorts and casinos, these are both resorts, we'll say. The other one doesn't say casinos. But this one's at an 8.2, whereas this one's at a 28.47. We take a look at its price to sales. So this is probably a better indicator. So they're both around that 3% or 3 price to sales or below. Las Vegas Sands is sitting at a 3.3, and Marriott is sitting at a 2.46. So both of these are fairly in the good range of around 3 or below, which I will say is good for both of these. If we take a look at their current PE ratios, they are sitting fairly high as far as price to earnings. We can see here that the Las Vegas Sands is at a 30.22, and the Marriott is at a 26.88. So when comparing them to like by like industry, in the same industry, they are trading very similar. We can see here that recently Las Vegas Sands has shot up from below 14, maybe 15, to now sitting at a 30.22. So maybe recently Las Vegas Sands has had some issues with their earnings, which is what caused their price to drop so dramatically recently. But that could be a good buying opportunity because maybe in the future, I'm going to go ahead and pull up Earnings Whisper. Maybe in the future, this company does make a recovery, and as they recover their earnings, that recovers their price. So I'm going to go ahead and punch in LVS. We'll take a look at their last earnings here on both. Oops. Go ahead and do this correctly. LVS. And I'm going to go ahead and just do that. And the other one was MAR. Okay, so coming back over here. We'll take a look at that here in just a second. Now, looking at forward PE, these just slightly lower. Las Vegas Sands in the future is expected to be about a 17.95. Marriott at a 22.43. So future PE, Las Vegas Sands is looking slightly better. Return of invested capital, both of these are fairly around that 10% or more. Las Vegas Sands at an 8.17 and Marriott is at a 15.88. I guess it would have been a nice comparison to have included the other three, but I am not going to go ahead and bring them back in here. And I believe that's fairly all I want to kind of cover as far as these ones go. But that is a quick little snippet that I want to kind of cover as far as these companies go. If we take a look at their earnings, okay, looks like Las Vegas Sands beat earnings recently in March 2019 with earnings of 91 cents per share, revenue of 3.6 billion. And they had a consensus, they were expected at 85 cents. They beat it at 91 cents. And they were expecting 3.5. They got 3.6. So they actually knocked it out here. They beat earnings. And so we can see earnings growth there for by 2.2% for earnings and 3.9% for revenue. Revenue growth there 1.9% for the quarter over quarter, I believe, year over year growth there. Now the other one I want to look here was the Marriott. Looks like Marriott also did really well. They passed it. They beat their earnings by 2.9, but they missed on their revenue by 2.1. So those are the earnings. So I'm going to go ahead and zoom. If you guys would like to pause, take a look at their earnings, you guys can go ahead and pause, look at the earnings here. They beat it, and pause and look at the earnings there and beat it. Now Las Vegas Sands, as far as year to date, this one's up 13.79. It has came down here slightly after earnings, and the Marriott is at 26.26. Let's see, was there any other information that I wanted to cover with this specific one? I do see more upside potential with Las Vegas Sands. So if I do buy it here at 59 bucks, I could see as highs as far as $80 before I see any sort of resistance. It could fall down into the $47 point. That would be about a $10 difference there into the negative, but I have nearly a $20 difference if I were to go into the future. If I were to buy Marriott right now, I don't have a lot of upside. I have much more downside potential versus upside, especially with possible volatility here in a few months. And if I do buy into Las Vegas Sands, I start getting a position started. If it does go in the negative, that's good for me. I can continue to buy into the specific position. But if it does take off, that's great. Again, my equity is kind of continue with this company. Once I do hit that 80 sort of resistance, I can kind of taper off and just kind of let it sit there, collect the dividend that this one pays because it does have a very nice starting yield, and kind of move from there. So I kind of want to make a video today kind of going over the comments that I received, going into how I'm looking at these specific companies. I'm going to be taking a look at their earnings over on Yahoo Finance. I'm going to go look at their 10Ks and gather just a little bit more information, but this may be one here that I will be adding if I have not added it in my Monday video. I wanted to cover a video going over specifically what I did, like a 1,000-foot drop, just kind of glancing over these specific companies and doing a comparison with Las Vegas Sands to 5 other additional companies within the same industry. So that is it for today's video. What do you guys think of Las Vegas Sands? Do you own it? What do you think of the Marriott? Of the two, would you be more likely to invest in Las Vegas Sands, or would you invest in Marriott, or do you have Hilton or the other companies that were in the video here earlier. Let me know your thoughts and comments below in the comment section. If you have not yet subscribed, definitely hit that subscribe button below. If you did enjoy this video, hit the thumbs up. I would highly appreciate it. And that is it. Thank you all for tuning in. I will see you next time. Have a great day. Bye.